So, how do we invest in this softer rhetoric, White House driven market? What to do now? We have seen the market pretty much rebound over the past few days. As of the making of this video, we've got the S&P 500 up 200 points over the course of the last few days. That's about 4.5%. That's a sharp rebound, no doubt. And I'm starting to see a lot of people getting excited. And I think it's a little bit too soon to pop the champagne. I want you to cool your jets. And I want to explain why. Now, the bottom line of this story is very, very simple, folks. This right now is a very, very bad time to play games with the stock market. It is highly unpredictable and it is insanely volatile. This is shark-infested waters right now. Lots of pros who have been playing this game for many, many years are waiting for new blood to try and time this market. If timing the market was a questionable exercise a few weeks ago, this market is nothing but danger. The reason is that there's so much unpredictability and there's so much chaos. You are basically going into a gunfight with a stick. I would highly advise you hold off on FOMOing back into this market before you listen to what I gotta say. Now, right now, what we're seeing is a market that's literally, I just want to remind you this, we're literally one bad social media post away from Trump or any of his administration members from a complete collapse. All they got to do is put out one X post that basically flips what they've been saying over the past few days, and the market is going to go in a heartbeat. You won't even see it happen. It's going to be like Bruce Lee. Like, folks, if you think Trump has changed his methodology, I just want to explain to you guys. Trump always, in his entire career, in everything he did, like him or hate him, has always been an agent of chaos. That will not change at his current age with his current situation. What you're going to see is Trump causing chaos. He's an agent of chaos and he's going to do his thing through this method. He's going to roll out policy like this. He's going to carry out decisions like this. Everything will be chaotic. And the market is going to bounce left and right like in the freaking pinball. You don't want to get caught in this trying to time this market. Now, I'm not here to tell you I'm getting bearish about this market. Not at all. I'm just saying there's a lot of risk right now in this particular setup. Because if you really think about it, yes, we're up 400 points, and that's wonderful. I hope the market keeps going up. Certainly not hoping for a bad market, right? But let's look at what we've got. What are we working here with, right? So right now, we have zero clarity about what's going on with the tariffs. We have no clarity. Definitely not with China. Besant came out and said, well, we probably will get a deal done because we don't want to decouple from China, but that's going to take a couple of years. Is that a binding statement? No. Does it give us any sort of a timeline to figure out what in the world is going on here? No. It's a statement of intent, which may or may not change in 24 hours because that's how this administration is operating. We have absolutely no closure about China. We have no closure, no certainty about any of the other tariffs. All we know right now is that the positive vibes are there versus the militant statements from a couple of weeks ago. But the policy has not changed. It's not been canceled. And the level of uncertainty really hasn't changed. And yet the markets have flipped completely. Even though the uncertainty levels are still high, the markets are behaving as if this thing is basically over. I hope it is, but we have not seen clarity yet to justify this kind of spike. You have to remember, folks, and if you've started investing recently, I really want you to pay attention to this. If you've been investing since 2023, 24, maybe over the past 6 months, listen to me carefully here. The market can flip. The sentiment can flip on a heartbeat. You're not going to be able to catch that. It's going to be like a Bruce Lee film. And it's going to be gone. Because if you think that the worst part is behind us, which I hope, but if you think that this was bad, what we've seen in the past few weeks, You folks ain't seen nothing yet. This is nothing. This is not real pain. This is not what a bear market looks like. This is basically just a bumper, a speed bump. This is not the worst that the market can do to your portfolio. And the bad times can happen very, very quickly. That's why I'm here to tell you, do not get caught with your hand in the cookie jar. Because FOMO and panic are the same thing. I explain this all the time. FOMOing back into the market because you think it's going to go up is the same thing as selling out the book, because the market had a few bad days. It's the same evil thing. Now, what you need to understand is that short-term volatility is always going to be something that's going to spook investors in the short term, and these sharp rebounds are going to get investors excited over the short term. But as a long-term investor, it is your responsibility to ignore all this crap and absolutely tune it out. All you have to do as a long-term investor is be responsible. For example, I'll give you an example of how sometimes following the system doesn't really work out in the short term. If you recall, a few weeks ago when Palantir was at 86, I told you, hey, it's a good time to trim a little bit if you're up big on your position. If you have built-in gains, massive built-in gains, take a third off the table so you can build your dry powder if the stock drops. Because if it doesn't, well, you still have your 70% in the game. You'll be fine. Just continue to DCA. Now, I said the same thing when Palantir was at $115, the same identical thing. And I didn't celebrate when the stock dropped from 115 all the way to the 70s. And I'm not crying now when the stock went from 86 to 100. It doesn't matter what the stock price does in the short term. You have to be true to your system. And the system is very, very simple. If you have a lot of built-in gain, whether it be Palantir or Tesla or any other stock, and you've accumulated massive gains since 23, and now you're sitting on all these gains, taking a third off the top to buy some insurance is really the responsible thing to do. It's not about losing your thesis or your conviction or timing the market. It's none of these things. It's just about buying insurance. If the market drops, you'll be more comfortable. And if the market keeps on flying, you still have 70% in the game. That's what you do as a responsible adult after 2 years of massive gains. Some of you all are sitting there on 200, 300, 400% gain on Palantir, not taking any profit at all, hoping that you're going to be buying a yacht in a year. That's just not responsible. That's infantile. And a lot of people will misunderstand that, misconstrue it, and will use it to make fun of you or me. It doesn't matter. The lion does not concern itself with the opinion of sheep. And you should do the same thing. You have to take care of your money, your concern. Whatever the other people are saying, it doesn't really matter. Who cares? Now, the system has to be very, very simple. And I'm going to give it away right now because I want you guys to learn. The system to navigate a chaotic market like this is through discipline. The way you create this discipline by building habits. What you do as a responsible investor is starting from scratch, because how you do one thing is how you do everything. You have to be able to budget out your month in advance. And in that budget, you have to figure out how much money you have to invest every single month. You take out your expenses, you add in your income, and then you figure out, okay, at the end of the month, after I paid for rent and food and all the necessities, that's the money I have left. How much of it I want to spend on fun, how much of it I want to invest. You come to a number, let's say that number is X, and you dollar cost average X, but you divide it by 50%. Essentially, you take half of that money, let's say your X was $200 a month, and you start investing $100 every single month, or every single week, or every single day. It doesn't matter. Now, the question should be, well, Tom, what do you do with the other 100 or 200 or whatever the case may be? Well, you save it on the sideline. That thing becomes your dry powder. Because when the markets are volatile like this, you're going to be getting a lot of opportunities to buy stocks cheaper and at a huge discount. For example, Nvidia, just a few days ago, was trading at 30% discount over 3 months. So in 3 months, the stock dropped 30%. People who were buying NVIDIA had the opportunity to double down during that period, because that's exactly what we do. If a stock we like and we normally dollar cost average into every single month drops 20% below the 52-week high, well then we double down the amount we invest every single month. And the money to double down comes from our dry powder that we've saved on the sideline, because we always invest in half. And that way, no matter how long this continues, you will always have money to double down into weakness, into volatility, no matter how rich or poor you are. People always say to me, well, Tom, how do you always have money to continuously dollar cost average into this volatile market? What if this continues for a year and a half? Well, if you follow the system I just explained to you, you budget, you invest half you save, and that other half you use to double down when times are bad. If you do that, well, you're mostly going to have money to DCA, double down, without getting extra money, without being rich. It doesn't matter if you invest $500 a month or $50 a month or $5,000 a month. None of this matters. The system and the consistency and the discipline wins, because over the long haul, over the past 15 years, we have had a lot of reasons to bail on the stock market, to get out, to sell your portfolio. The amount of headlines I can show you right now on the screen that have told you to get out of the market because floods, wars, crashes, collapses. We probably could get that list into the hundreds of headlines of why it was a great idea to sell out of the S&P 500 and leave the stock market. And yet, over the past 15 years, I told you this yesterday, if you just held on, you've made 830% of profit. Long term, the markets are basically a weighing machine. Short term, they're a voting machine. Nobody cares about the short term. Long term, if you invest for 10 years plus, you will be fine as long as you pick good companies. Generational companies, companies that are not so dependent on what the tariffs will be in 2025 or what the policy would be in 2026. Companies that are changing the way we do business and the way we manufacture and the way we basically interact with each other. Those are the companies you want to invest in, because it doesn't matter what the administration is in the White House. Companies like a Palantir, companies like a Tesla. Lots of different examples out there. There's literally hundreds of great companies out there that are suited for you. You shouldn't be trying to get into a stock because some YouTuber told you to buy. You shouldn't be selling a stock because some YouTuber told you that that stock is now not good enough for you to hold. None of this is how you do the selection process. You have to develop your own skills and you have to develop your own conviction. And you got to be man enough or woman enough to take your own decisions. This, whatever we do here, that's just to inspire you, to keep you updated, to give you some insights, but you got to learn to trust your instincts, your skills, and make your own decisions. Because when bad times happen, if you don't have that conviction inside you, none of this is going to help you, because eventually you're going to panic out. And the same thing happens when people are fomoing in. Now, if you actually want to get better at this, what I do suggest you do, and again, it's not for everyone, but if you want to get better at this, I have an academy in which I teach people to do exactly that. We have almost 50 lectures to teach you how to become a better long-term investor. Patreon.com/Tom Nash. Again, it's not for everyone. I'm okay with that. But if you want to get better at this, and you're not looking for stock tips or options, and you actually want to learn the skill set, you're more than welcome to join. We are actually moving to a new website. I said it before, I'm going to say it again. Once we move, the price is double. So if you lock in your price right now, it's going to be yours for life. You're not going to pay more once we move. But then again, some people like to pay more, and I'm fine with that. In any case, thank you so much. I appreciate you all. I really, really enjoy doing these videos. I'm a little bit busy right now, so as you can see, I can't get to the studio, but I don't want to miss on any of this because this is just a lot of fun. If you've got any questions, comment below. I'll try to reply to as many as I can. I really enjoy interacting with you in the comments, so really, really appreciate it when you guys comment and share the video and all that stuff. Thank you so much. I'll see you in the next one. Peace.